Scene script: how low can Bitcoin price go? The question that's been on everyone's lips recently as we see Bitcoin's price taking a dip. What's causing this decline? What factors are at play here? Let's dive into the factors contributing to this dip. Bitcoin's price has been on a rollercoaster ride, dropping up to 15% since the weekend. This sudden dip in Bitcoin's value has led market observers to reconsider their predictions, with some even suggesting a new lower price target. A key player in this scenario is popular analyst Mark Cullen, who's been closely watching Bitcoin's performance. He believes that the cryptocurrency is gearing up for another attack on the $60,000 resistance. Using the Elliott wave method, a technique used in technical analysis to predict price movements by observing and identifying recurring wave patterns, Cullen suggests that a final downward move may be imminent. This could potentially take Bitcoin down to around $59,000, a price level unseen since late February. Of course, there are other factors at play as well. For instance, Matthew Hyland, another well-regarded analyst, has noticed that Bitcoin has lost the support of its 10-week simple moving average, currently lying at $64,130. He suggests that the upcoming weekly close will provide further insights into the current pullback's staying power. On the other hand, Bin Dang, a contributor to on-chain analytics platform CryptoQuant, predicts that Bitcoin could stay lower for longer before re-challenging its highs. According to his adjusted cumulative value days destroyed metric, or CVDD, Bitcoin might be heading into a lower reaccumulation phase. This metric considers the number of days a coin has been in its wallet and multiplies this by the current price, providing a unique perspective on coin movement. However, despite these predictions and analyses, it's important to remember that the crypto market is highly volatile and unpredictable. The current geopolitical climate, for example, could cause unexpected shifts in the market. But what does this mean for the long-term prospects of Bitcoin? We'll delve into that in our next segment. While the short-term looks bumpy, it's essential to consider the long-term perspective. Some market observers, like popular analyst Matthew Hyland, are turning their attention to the upcoming weekly close to glean insights into how long the current pullback may last. Hyland pointed out that Bitcoin has lost the support of its 10-week simple moving average, which presently hovers around $64,130. Now, this might sound a bit technical, but in layman's terms, it's a trend line that smooths out price fluctuations over a given period. In this case, 10 weeks, providing a clearer picture of the overall trend. Why is this significant, you ask? Well, the last time Bitcoin tested this average and didn't close below it, it turned out to be an excellent buying opportunity. So the upcoming weekly close will be crucial to watch. Remember, it's not just about the dip, it's about whether the price can close above or below this key level. But let's take a step back and look at the last time full candles fell below the 10-week simple moving average. This happened in mid-2023, and if you recall, that was a period of significant market correction. So it's safe to say that if history repeats itself, we might be in for a bit more of a rollercoaster ride. However, it's worth noting that these moving averages are not fortune tellers. They're tools used by traders and analysts to gauge market sentiment and potential future price movements. As we navigate these choppy waters, it's vital to keep perspective and remember that crypto markets are inherently volatile. They're subject to rapid price changes due to a myriad of factors, including technological advancements, regulatory news, and broader economic indicators. So while short-term trends can be useful for day traders, long-term investors should keep their eyes on the horizon. After all, Bitcoin has proven its resilience time and again, bouncing back from numerous dips and crashes throughout its history. However, longer time frames could yield frustrating conditions for Bitcoin bulls. Another aspect to consider is the reaccumulation phase. This phase is a critical juncture in the Bitcoin market cycle, and to truly understand this, we need to dive into a unique metric known as the Adjusted Cumulative Value Days Destroyed, or CVDD for short. The CVDD is a fascinating tool that can provide some insight into the future trajectory of Bitcoin prices. It works by measuring the number of days a coin has been in its wallet when it moves on-chain and multiplies this by the current price. By leveraging this metric, we can get an idea of the overall market sentiment and anticipate potential price movements. Analyzing the CVDD, Bin Dang, a contributor to the on-chain analytics platform CryptoQuant, suggests that we might be in for a bit of a waiting game. According to his analysis, BTC or Bitcoin to USD could stay at a lower price point for a longer period before it starts re-challenging its highs. This could mean that we're entering a period of reaccumulation, a phase where market participants could gather more coins at a lower price. Now, it's important to note that this is not a definitive forecast. Like any market, the world of cryptocurrency is influenced by a myriad of factors, many of which are unpredictable. But tools like the CVDD can help us make more informed decisions and anticipate possible trends, even if they're not 100% guaranteed. It's also worth mentioning that while the CVDD suggests a longer reaccumulation phase, it doesn't necessarily mean we're headed for a catastrophic crash. In fact, Bindang doesn't believe the current geopolitical factors driving the market down will lead to the levels of panic we've seen in past market crashes. While deeper corrections can occur, the current geopolitical impetus for the down move may not reach levels of past panics. So, while the market might be in for a bit of turbulence, it's not necessarily time to hit the panic button just yet. So what is the worst-case scenario here? A question that might send a shiver down the spine of the most seasoned Bitcoin investor. As we navigate the unpredictable waves of the crypto market, let's consider a scenario that falls under the category of worst case. Imagine that Bitcoin's price takes a plunge, a deep dive to just under $40,000. Yes, you heard it right, $40,000. This figure is not plucked out of thin air. It's derived from the chart's Phase 1 line, a significant marker that stands as a reminder of the depths to which Bitcoin can potentially sink. Now, before panic sets in, let's put this in perspective. Bitcoin, like any other financial asset, is subject to market fluctuations, geopolitical influences, and a multitude of other factors. A dip to this level doesn't spell the end of Bitcoin, but rather signifies a challenging phase in its life cycle. In fact, in the grand scheme of things, such a dip could be seen as a rebalancing act. A moment of respite in Bitcoin's meteoric rise. A time for the market to catch its breath, reassess, and prepare for the next climb. A drop to around $40,000 could simply be a reset button, a chance for Bitcoin to build a new, stronger foundation for its next ascent. But we must remember, these are all possibilities, not certainties. The crypto market is a complex beast, influenced by a myriad of factors, some predictable, others entirely unexpected. As we've seen in the past, Bitcoin has the resilience and the potential to bounce back from significant dips, often emerging stronger and more robust. So even in the face of a worst-case scenario, it's important to maintain perspective, to keep calm and remember that in the world of crypto, volatility is the name of the game. This brings us to the end of our analysis. Let's continue to watch, learn and navigate these fascinating crypto waters together. Today we've delved into the fluctuating world of Bitcoin prices. We've explored the various factors contributing to the recent dip in Bitcoin's price, from a potential fresh price drop to a long-term retreat to around $40,000. We've seen how market observers and analysts weigh in on where the market is headed and how soon this could occur. We've examined the long-term perspective, acknowledging that despite the current dip, Bitcoin's value has proven resilient over time. We've considered the possibility of Bitcoin circling around $62,000 and the potential for a fresh attack on $60,000 resistance. We've also discussed the reaccumulation phase, a period that may prove frustrating for Bitcoin enthusiasts. Bindang's adjusted cumulative value days destroyed metric predicts that Bitcoin could stay lower for longer before re-challenging its highs. This metric measures the number of days a coin has been in its wallet when it moves on-chain and multiplies this by the current price. And we've touched upon the worst-case scenario, a plunge to just under $40,000. While history shows that deeper corrections can occur, the current geopolitical impetus for the down move is not expected to reach the levels of panic seen during the COVID-19 cross-market crash in March 2020. In conclusion, the world of Bitcoin is volatile and unpredictable. It's a world that constantly keeps us on our toes, and while we can speculate and analyze, it's essential to remember that every investment and trading move involves risk. Always conduct your own research when making a decision.